Creators, let's talk about the tax reforms for you as an individual creator, a freelancer. From January 2026, personal income tax tightens very much. It used to be disregarded, it was just the business owners that got worried about tax. But from these new tax reforms from 2026, your personal income will be taxed. So one thing I get to tell creators is that if you're operating a business, if you're a freelancer, you should consider having a separate account for your business. That way, no one is taxing you for your personal direct income, which has nothing to do with your business. But we see a lot of maybe content creators, musical artists, and filmmakers sometimes just get their monies, all of their income directly into their personal account. So think about this. If you're earning, say, 12 million naira annually, right? You already fall within the 21% rather. I'm going to share a chart with you in this video that would guide you properly. Just drop the comment chat. So if you have your LLC, get more structure. Of course, there are pros and cons to this. And you don't entirely get the zero tax like people are thinking. When they say zero tax doesn't mean you're not going to have to file your taxes. I explain filing of taxes as you're bringing your books, you're coming out and say, this is what I earned in the year 2026. This is the profits I made. These are the losses I made. Even when you fall within the exempted people from paying taxes, you need to always file your taxes every other year. That's where you avoid being penalized. If not, you see yourself paying penalties for a business that you actually incurred losses in the first place. Also, you should know that VAT, your value added tax, is different from the company income tax and from the personal income tax. I'll be getting questions from business owners stating that, what if I add the VAT to my business, like you see in the restaurants and some other businesses, right? Yes, you can add the VAT, but know that if you're adding VAT to your profits for you to receive the money and keep for yourself, it's just means you are serving as a collector for the federal government or for the state government for that tax purposes. So if you consider adding VAT to your profits, keep it aside. This is just business advice. I don't even think anyone needs a lawyer to tell you that. If you are receiving value added tax from your profits, from your clients rather, you shouldn't add that to your profits. It doesn't belong to you. Otherwise, you still end up paying that amount. You should be able to remit that. Another thing is you need to have your registration in place, your personal tax registration in place, and your business tax registration in place. That way, it will be easy for you to come forward saying, this is what I'm supposed to pay annually if you think you are being taxed wrongly. Lastly, and most importantly, under the 2026 tax reform, the goal isn't